You're still watching Smart Money on CNBC-TV18. We are in conversation with Devina Mehra of First Global. We're talking particularly about women and financial independence. As we told you earlier, not too many women, at least only 1 out of 5 people in India is a woman investor. So we're trying to sort of bring about some financial literacy to help women invest better and to grow their own wealth. Devina, I wanted to ask you about the rules of asset allocation that one must follow and what all should one avoid. You know, we generally know what one should invest into, but what should one avoid?
So if you're not a full-time investor, avoid things like on the risky end of the spectrum, whether last year I was warning against crypto. Now I think anyway people would have gone out of that, or too much exposure to things like derivatives or commodities. As I said, all these things at the most can be a tadka to your dal. They cannot be your dal. So if you're a normal person having a life other than investing, then just concentrate on getting the broad asset allocation right for your goals and how old you are and so on. And rather than trying to refine it too much and trying to get the last bit of extra return. And also let me tell you that, you know, people talk very grandly about the great picks and the multi-baggers they have found. They will never ever say that where all they have lost money. And the greatest investors also never have a portfolio which consists of all multi-baggers.
So that's true. That's true. I agree.
It is Warren Buffett.
But you know, I mean, also then you help us. I mean, you help us build a multi-asset portfolio, right? As you said, it's better to just be a bit cautious and not sort of go in for, forget about crypto, even go in for the small cap stocks or the multi-baggers. There's no point looking for that. Be consistent, you know, with your SIPs, etc. But if you want at least, say, 15% compounding growth over the next 20 years, since women do have a lot of financial responsibilities, whether it's educating a child, getting them married, you know, or even you're having your own retirement plans. If I want a 15% compounded growth, what kind of assets should I have in my portfolio?
See, 15%, even in theory, you will not get without a pure equity kind of portfolio. No, in a blended portfolio, 15% you might get. I'm not saying you will not get. You in the last 2 years you have, but I'm saying on a consistent basis, that is not what the that's not what history says. If you take history as a guide, so if you are taking a blended portfolio, 10, 11, maybe that is about the maximum you can target. You might get more, as I said, but you cannot bet on it. And also, I mean, I want to underline that again, that be prepared for drawdown, be prepared for losses in the middle. You know, if you're going to panic and get out every time the market falls and try to get in when it's running up, that's absolutely the wrong strategy. It is like last year when NASDAQ was running up, everybody wanted to jump onto NASDAQ ETFs and NASDAQ fund. After it crashed 40%, suddenly people said this is too risky and I must get out. So you get in and out at the wrong times, which is to be avoided. And as I said, do globally diversify. That is very important. And this is a learning that came to me through, let's say, 25 years ago. There was an Asian crisis, which, you know, many of your viewers may be too young to remember, when not down and out countries, but Asian tigers, which is Taiwan, South Korea, Thailand, Indonesia, all of them fell 50 to 90% in dollar terms in 1 year. So that actually was the wake-up call for me personally, that it is not prudent to have all your eggs in one country basket. However,
since
you think of that country.
You know, since you are sharing a lot of your personal experience, it will help our viewers to understand from you, what was your first experience of achieving financial independence? What was that turning point when you decided, you know what, I'm going to take my salary into my own hands and not let my father, my brother, my husband take decisions for me? How early on was it?
Well, my father had no clue about investments anyway, so he was never involved in managing his own or my investments. I mean, my parents never even asked me what my salary was. I don't think they had very good idea of what their own salaries were.
I think that's good, right, in a way? I mean, it's good. You learned it the hard way. You didn't have anyone to sort of handhold you.
Yeah, I mean, when I came to do my MBA, I didn't even know what a share was or what a debenture was. I had absolutely no clue because Lucknow wasn't a business city, it wasn't an investing city. So, in the beginning, of course, it was all usual that whatever is in the bank plus PPF and things like that. It is only slowly that you really started concentrating on this. And as I said, as a woman, there is always this temptation and that there are already too many things on my plate, so let somebody else handle that. Of course, now it is easy for me because I have a team managing portfolios and funds, and they can just as well do it for me as well. So,
But you created but you
yes, it was,
created that team yourself, right? So kudos to you for that.
yes, I mean, they've been all trained by me. So I mean, I've been in the business, so it has been relatively easy for me. But as I said, this is something that you have to consciously do, because otherwise, a lot of professional women also just they are not even taking a decision that I will not manage my own money. It is just a drift kind of thing that it just happens to move to the man, and it just goes on like that, and you keep meaning to look at it, and then you don't look at it. So it just drifts along.
Yeah, finance,
So
I
don't
guess,
let drift happen.
traditionally, I guess finance has been sort of a man's world, but now things are changing. Recently, a very young investor approached me and asked me, she was just out of college, and she asked me, I always second guess myself. I don't know if I should pick this stock or not. So, somehow it comes easier to my husband than it does to me. Why is that, you think? Why are women so reluctant to take those financial decisions? And how do you change that? I mean, what are the personality traits that perhaps you need to harness in order to change that?
Okay, first of all, as I said earlier, that imprint it on your mind, and this holds for everything in life, not just investing. That confidence does not equal competence. I learned it through hiring mistakes, but this is so important, that just because the man in your life says or is or acts confident doesn't mean that they're actually good at managing the money. So get over that mental barrier. The second mental barrier, which Indian women in particular find it difficult, is that there will be losses, as I said, that especially if you are investing in equities at some stage. So at that time, both the woman and her spouse, in a typical situation, the woman will also beat herself up saying that, why did I do this? And the man will also say that, if you didn't know this, why did you have to dabble in it?
Yes.
And so you will step back. Whereas if a man makes a loss, it is all fine. I mean, most women are even reluctant to question their husband in the interest of quote unquote peace in the household, that why did they make losses? But the husband has no such barriers. So there's a lot of socialization that has gone behind it, which you have to overcome.
I agree with you, and I guess that's a debate for another day and another show, right? So let's wrap up. We have a couple of minutes left. I wanted to ask you, since you are, a symbol of financial independence, you've been managing your own money, you've been growing other people's portfolios as well. What has been your best and worst financial decision through the course of your career over the last decades?
Over the last decade is a little bit more difficult, but I probably got into equity investing a little later than I should have. Of course, it still was not so late by general standards, because I started working at 21. So, even if I didn't do it for the first 4 or 5 years, it was not such a big gap. But yes, I probably should have focused on it earlier than I did.
And your best decision?
Best decision probably to get into this business in the first place, and into the world of investment, which besides the money part also is very rich in learning.
Oh, absolutely. And I can tell you, as a market commentator and observer, there's so much to learn every single day, and it's equally challenging, right? But there's no fun without it. Once the passion kicks in.
Very few businesses where you can say that 3.5 decades on that you're still learning.
Absolutely, absolutely. Devina, it's a pleasure speaking with you. We've run out of time, but not out of questions. Thank you so much. And I really enjoyed this conversation, because it's more about, educating the investor that it's never too late to start your financial journey. All you need is a bit of confidence, a lot of research, and just faith in yourself, right? Thanks a lot, Devina, for these pearls of wisdom.
Thanks, Sonia. Great being on the show. And I hope a lot more women become financially independent.
Oh, absolutely. And I'm sure we've done our own bit, right, to make sure that financial literacy spreads throughout, especially with the women folk. Thanks a lot. With that, it's a wrap on this edition, the special edition of Smart Money. Thanks a lot for watching. Have a great weekend.